Hello everyone, this is Matthew Frailey, founder of BreakpointTrades.com. Founded it way back in March of 2003 to provide advanced technical analysis, market commentary, trade ideas, and advanced mechanical trade systems, which is my passion. Anyway, hope everyone has had a nice weekend. This, of course, is my weekend stock market update. I'm going to do a very thorough technical analysis review of the stock market, various sectors, commodities, cryptocurrencies, trading systems, you name it. So these weekend newsletters, if you're new, happen to be very comprehensive. They're not for you short attention span TikTokers out there. This will probably take 40 to 50 minutes. Again, it's for folks who really like to dive deep into the charts. It is Sunday afternoon, August 17th. This also is our back-end recorder, what our subscribers see. And again, if you're just a YouTube subscriber, you should definitely join us. Check out the website, www.breakpointtrades.com. But let me get this recording started right now for our paying subscribers. Hello everyone, this is Matthew Frailey with BreakpointTrades.com. First off, I hope everyone's had a wonderful weekend so far. It is Sunday afternoon. Futures are about to open in about 9 minutes. It is August 17th, 2025. Also, just a quick admin note. Steve Nelson, as many of you know, he does the other newsletters here. He's on a family vacation. He's on an Alaska cruise. He'll be back on August 25th. So it's going to be me the full time while Steve is gone. Again, hope you all had a nice weekend. This weekend newsletter got a lot to cover. We cover our general things here as always. We look at the general market indexes, various news releases, etc. Right before we go into the indexes, though, I'm going to talk about some administration things. I'm going to talk about the KISS systems and a new Matt's Macro Vision play. Then, of course, we'll move on down to the general market. We'll review the market sectors, top-down approach. We'll look at the bond market. We'll review various commodities. We'll look at the US dollar, cryptocurrencies, Bitcoin, Ethereum. We'll look at precious metals, gold, silver, platinum, palladium, and anyway. All right. As far as the general market, like a broken record, the stock market continues to march higher with the S&P 500 and the NASDAQ once again making new all-time highs. The NASDAQ and S&P last week gained about 0.85% respectively. Now, while the Dow Jones made a new intra-week all-time high, did not make a closing high, and the Russell, which outperformed, it gained 3.1% last week, but of course it is still well off those November 2024 highs. But we've been seeing relative outperformance in the Russell lately. Not surprising. It's trying to play some much-needed catch-up, to the S&P and NASDAQ. Now, the market, honestly, the market has been the best mountain climber there is, right? It has climbed one of the biggest walls of worry in history, it seems like, from the April 7th lows. It has ignored negative news, various technical divergences. And guys, that's why, again, like a broken record, I'm going to bring up our KISS trend following systems. They've been awesome. They're not perfect. Nothing is. But many of these KISS systems, especially the high performance ones, went long major stocks like Microsoft and Nvidia and stuff like that way back in early to mid-April, and they're still long. So they've caught this entire round. That's what they're designed to do. I'm going to show some examples of that below. Otherwise, I will say on the market, we are entering a less favorable seasonality, right? We are now past earnings season. The market has done what it's does 90% of the time. It's rallied into earnings season. Well, earnings season is now over. We're now in mid-August, and usually seasonality is weaker, especially when you come into around September, okay? And so eventually we're going to see some sort of deeper wave 4 pullback correction. The last pullback we had in late July was simply a very tiny microwave 4. When we do finally get some sort of pullback, I'm looking for maybe a 5 to 10% correction in the market, and then another rally for the end of the year, okay? That said, I do think 2016 could be shaping up for a negative year. So getting out my, say, crystal ball, you're going to have a trifecta of things that could affect the market from, the presidential cycle tends to be weaker. The second, year of the presidency, the economy, I think we're going to see some issues there finally. And just from a wave count perspective, will be likely have completed some of these wave 5 of 5s. Okay. Now this week here we have some economic news data. We got a lot of housing data pretty much every day, Monday, Tuesday, Wednesday, and I think Thursday. We have the FOMC minutes on Wednesday and initial jobless claims, S&P 500 PMI data as well on Thursday. And as always, follow your plan. I know some of you state, well, we don't know how to make a plan. Look, I get it. It's not easy. But at the end of the day, we all have to come up with something that fits our trading style, our risk tolerances and our personalities. And it's just something that eventually you have to work on. You have to have some sort of plan, some sort of, discipline. Otherwise, if you're just out there trading willy-nilly, that's where, you don't become a profitable trader. Okay. We all need some sort of discipline. That's also what's good about the KISS systems. They have their own discipline. But let's go and before we get to the general market, let's talk about some admin things here. So, image number 2, here's an image right from the KISS systems. And this is the high performance section. Now, again, there's a lot of you on the website. Maybe half of you have KISS memberships, but again, a half of you don't. And it still boggles my mind. Why not? A lot of times we offer this on a coupon basis or extra time. So a lot of times folks are paying $30, $35 a month, with coupons or something like that. So it's very easy to find $35 to $40 a month worth of value here. Okay. But I bring this up. So here's from the high performance KISS systems. And again, as I stated in the open comments, you can see a lot of the major stocks here, Nvidia, Microsoft, whatever. Here's a couple of the ETFs, leveraged ETFs, UPRO, SPY 78. And look at these. Most of these went long, say in early to mid April. So most of these have caught this, or the majority of this entire uptrend from the April lows. Okay, look at these gains. A lot of these are up. Nvidia, it's up 65.5%. It went long on April 9th. And, it's been, if you had a membership to this section, it would have alerted you to that if that was one of your favorites, and it would have kept you in this uptrend. UPRO, it's up 54.8%. That's on the S&P. Now, that's the 3X ETF, but, went long on April 30th. Hell of a trade. So that's the beauty of these KISS systems. They're not going to be perfect, but when the markets have these big trends that maybe you wouldn't be disciplined or emotional enough to stay in the entire trend, they generally will. That's what they were designed to do. And also another point I want to make out, you see some of the systems here, the Microsoft or Nvidia that went long on April 9th, the previous trade it lost 1.4%. That was during that downtrend. When the markets enter a downtrend, sometimes the systems might have a whipsaw trade or two, and that's what they did in some of these in March to early April. But that's not the time to give up on them. In fact, that's kind of like selling a stock at the low. So I know some people that gave up, that had KISS system subscriptions, that literally gave up in early April because they had a couple whipsaw trades. Well, they gave up at the exact bottom. That's what you do not want to do, guys. Again, it's common sense. I get it. The emotion. There's so much emotion in trading. But, honestly, when the KISS systems, if I see a system have, say, 1 or 2, even 3 losing trades in a row, I'm actually excited. Why? Because I know generally it's due for a big trending move. Their losers tend to be very small, and then they'll catch a big winner. That's how they tend to go. So I actually get more excited if I see a losing trade or 2 in a row. Whereas some of you, I think you get more scared if you see a losing trade or 2 in a row. You need to reverse that psychology. But anyway, that's an example here. Now, I want to bring up the next thing. So, Matt's macro vision. Matt's macro vision. All right, so hopefully you heard that corny line, but I'm adding a new stock to Matt's macro vision. And this is all going to tie into the KISS high performance systems, which I'll bring up in a minute. But UnitedHealth, okay? This has been in the news. It got absolutely decimated this year, down from a high of 621 in November 2024 to a low of 234 in Actually, I think that's incorrect here. It says August 2025. Sorry about that, guys. I think it's actually, let me just check on that. Yeah, actually, that's right. The low hit $234 in August 2025. So, absolutely decimated. But just, look, let's ignore the political thing of United Healthcare. First off, it's not going out of business, right? But secondly, I did some work on it, and I did go long this thing. I went long a couple weeks ago. I talked about this on the trading community. As I thought it was a low risk, at least a mean reversion bounce play. But the more I looked into it, I decided to add this to Matt's macro, and here's why. So first off, it's not going bankrupt, right? Secondly, as you know, Warren Buffett purchased over 5 million shares in the second quarter of 2025. That said, the purchase, it was also revealed that they tried to hide this to the general public. And there's an article in Seek and Alpha about that. Secondly, Jim Simmons of Renaissance Technology, that is the most successful hedge fund of all time. It's closed, you can't get into it, but they have something like, insane returns, something like 50-60% annual returns. Like, it's just absolutely insane. But they bought a position into it. Okay. Secondly, United Healthcare has a PE of about 11. Now, it may have bumped up a little bit with the bounce on Friday, but let's say it's 11 to 12 versus the S&P, which is around 24 to 25. So it's very, it's valued nicely. Here's another thing. It has a 200 billion market cap, but only 10% of that is available to the public. 90% is owned by banks. So it's got a tight float of, so out of 907 million shares, only 108 million are tradable. That enables it to be able to push stronger if the public starts getting into it. Also, it has a dividend. It's not a massive dividend, but a 3.4% dividend yield. Secondly, I added it to the BPT High Performance KISS System section. So if you're someone who doesn't have a subscription to the KISS systems, you could buy that, set it as a favorite, and now trade this system or trade this stock on a systematic basis. It'll tell you when to get long, it'll tell you when to put a stop, it'll tell you when to exit. Okay, so that's a carrot to say add a subscription to High Performance KISS if you're not already in it. Let's take a look at the charts here. So chart before, here's UNH. Here's the daily chart. Again, first off, it bounced there in May when we pointed that out. Looked like a bounce area, and it did. I actually traded that, Steve and I. But then it went sideways. It dumped again. It bottomed in basically end of July, early August there. You could see a MACD divergence formed. And I bought it not at the low. I'm not that perfect like some of you guys are. I think I bought it around, I don't know. I'd have to look, but maybe somewhere around here, maybe just around that 9 EMA. And I almost sold it. And then the news came out last week about the Buffett, and then it had a big gap on Friday, of course. But this could be a breakaway gap, and it's now back above its 50-day, which is a positive. We're coming off a divergence. So I actually added to my position on Friday. Next, here's the monthly chart. So again, you can see how decimated this was. You got a big shelf support around 425. That was absolutely lost. It fell from 621 down to a low of 235, 234 here in early August. You also had a perfect RSI exit signal on this trendline break, basically December last year. So that was actually an excellent sell signal. And by the way, this is an example, guys. Stocks do have life cycles. So if you've just been long, and then you have an exit plan, someone could have wrote it down from 621 all the way down to here. That's why you always need some sort of strategy or exit plan. Okay. But anyway, it lost that area. It came down to the 61.8 fib where it's been finding support. This is a monthly chart, guys. You can see this goes back to 2008. And around that 61 fib, there's also the 200 month moving average down here. So you can see it had a big reversal finally this month. Long term, I believe it could at least make it up to this area. It's going to struggle there, but that would be a pretty good percentage move up to that 425 area. Chart number 6, here's the weekly chart. Again, it shows you how, this area up here, this broken shelf support around that 420-ish area, could be a target longer term. Again, once it gets back to there, it's going to struggle, but I think that could be at least a minimum long-term target. And next, as I stated, I did add this to the KISS systems. So here's the stats, right? This is a half-day system, by the way. So there's 2 bars in a day. So here's the KISS system here on the left. There's one slight losing year. That's 2023. It was down about 6%. Okay, this is based off $10,000. It's not compounded. So you can see buy and hold here, 2023. So similar, right? But look at our 4% down in 2000. So similar to the 2000 or whatever. But anyway, take a look at 2025. Buy and hold, despite the 20% rally off the low, it's still down about 40% with a 61% drawdown. Okay. Drawdown on this is around 7%, I think, on the system. But otherwise, you can see very good gains all these past years. 2022, it made 5.6%. 2022, the KISS system made 10%. 2021, buy and hold made 43%. It's pretty good. But the KISS system made 71, so beat it. 2020, buy and hold made 19.25%. KISS made almost 60%, so totally blew buy and hold out of the water. 2019 made about 18-19%. Buy and hold made 17-18%, so pretty close. KISS was a little bit higher. So you can see KISS is higher almost most of the vast majority of the years with much lower drawdowns. So again, this is added to the KISS systems. And image number 8, here's in the KISS systems, high performance. Again, you can see UNH half day system is already added. So, again, if you have a KISS system already, you can go ahead and set that as a favorite. Remember, this is now part of Matt's macro play. Or if you don't have a KISS system subscription, you can buy it. And this is, something you could follow. All right. I am going to have a separate dedicated video on this maybe later tonight because I think it deserves its own video. And image number 9, again, if you don't have a KISS subscription, you can go right to the website. On the various memberships, we have the KISS memberships here. Monthly, 6-month, or half year. Obviously, the half year is your best bet with that big discount over the monthly. And, a month isn't long enough, guys. So anyway, there you go, guys. New stock for the Matt's Macro Vision. All right, moving back to the general market newsletter. So item number 10 shows the index sector table. What transpired last week? You can see Friday was a little kind of a consolidation day. Remember, Friday was OPEX. And I'll bring that up too, guys. The market was also holding up well because of options. Options are such a big deal with the market, gamma, stuff like that. But OPEX is now passed, so now we'll see if that changes any dynamics with the market. But otherwise, you can see, once again, gains for the market. The S&P and Dow were up about 0.9%, while the Russell outperformed up 3.1%, and the Dow up 1.74%. Next, as far as the market sectors here, the 21 sectors, the majority were up for the week, as you would expect. Some pretty good gains here across the board, especially in the home builder area. Biotech had a big week. Biotech tends to move with small caps, so not surprising there. Still a little weakness here in the energy area. Currency-wise, US dollar has pulled back. Now we'll see if it can form yet another higher low or not. Bitcoin consolidation for the week. Ethereum managed to bounce, though. Commodities mostly to the downside. And you can see crude oil has been a little weak here. Natural gas, uranium. Coffee was up big. I'm not showing a chart of that tonight. Precious metals were also slightly down. Gold down 1.8%. Silver down 1.1%. GDX, the miners, up 0.4%. They're still holding relative strength. Platinum up 1%. Bond market, 10-year, 30-year Treasury yield were up. And again, remember we have those FMC minutes this week. And image number 11, this shows you the economic news calendar, which again, I already discussed this. A lot of housing data this week. FOMC minutes there on Wednesday. Philly Fed, S&P Global, manufacturing PMI there on Thursday. Okay. All right, let's go and jump to the index charts. So first chart below, item number 12 is the weekly chart of the 5 major indexes. The Dow here at the top, you can see once again testing those previous all-time highs. Broke it on an intraday basis, but honestly, this probably still needs to break out to a new high. It's so damn close. While the S&P and Nasdaq, they all broke out to new highs, way back in June. So Dow's trying here. It's right at that area. The Russell at the bottom, that's still a long ways from its highs, but eventually that should be tagged as well. But it's outperforming here lately. Next, number 13, here's the weekly view of the Dow. Again, I don't show it too often. It's 30 stocks. But again, you can see it's up against this kind of triple top resistance. But I do expect it to eventually bust through here and play catch up to the other indexes. We had this bigger demand zone down here, but now we have a new demand zone right around here. Obviously, again, hell of a rally off that April 7th lows, which again corresponded pretty close to the 200-week moving average, and essentially bounced off the 2022 highs, which became support. Perfect technical analysis. Next, chart number 14. Here's a monthly chart of the Dow, or the S&P. Up 1.74% so far for August. This is the bigger picture, guys. Again, shows you back to the early 90s. Remember, we've been in a secular bull market since the March 2009 lows. Absolutely no changes. All right, we do have a little MACD divergence here, RSI divergence starting to show up a little bit, but otherwise, I expect this to remain in this secular bull for some time. Next, chart number 15. Here's a real zoomed out view. Oh, apologize, this chart isn't going back far enough, so I need to give you an updated view of this. So here's this chart again. Apologize, our back-end system wasn't showing this back. So this is the big picture chart. I haven't shown this for a long time. This shows you the S&P, back to the 1920s. You can see this big uptrend channel we've been in. This shows you the secular bull and bear markets, during the last 100 years. And again, I've talked about this before, but, markets tend to move in these long-term secular bull markets that last, usually 17 to 20 something years, and these secular bear markets, which are like, 15 to 20 years as well. And there's been 3 major secular bear markets since the 1920s. And there's been 3 major secular bull markets since that time. So the last 2 secular bull markets lasted roughly 24 to 26 years. Okay. And this one were around 16 years. So, history would tend to say we still got a long ways to go for this secular bull, but, we'll see. Again, this is not applicable to current trading. I'm just showing you this for informational purposes. Next. Image number 16, here's a weekly view of the S&P, again up 0.94% for the week. Just continue to move up. Now we do have a little RSI divergence on this next high, so we'll see if that does anything or not, but we've had basically a V move off that demand zone from April. We now have a new demand zone up here. Again, guys, for the market to really start breaking down, you need to break previous demand zones, and we have yet to do anything like that. Chart number 17, here's the other weekly view of the S&P. Shows you we're in this wave 5 and some targets. One of the fib targets would be up around 64.57, which we're up right around now. There's yet another one up at 69.58 at this 1.618 fib extension. Ultimately, we'll see where this thing goes. And chart number 18, here's the S&P equal weighted. Remember, showed this a couple weeks ago. This did not make new highs yet. That shows you how, that shows you the effect of those large cap tech stocks that basically dominate the market. All right, moving on, chart number 19, moving on to the lower time frames. Here's the daily views of the S&P 500. These are the KISS systems. So the SPY daily KISS is still long. Smart trailing stop is around 615. The high performance KISS index is long. Okay. And it got out and then it basically got back in. By the way, the vertical lines here now, these shows you those entries of those mean reversions, long trades inside the main KISS trade. So you can actually see those a little better now. You can see, that SPY had a nice one recently that closed out. Nice winner. Next, image number 20 shows you the 4 time frames. Daily up here. We had that pullback on Friday. Otherwise, ATR is your support in all these time frames now. So we'll see if those can act as support on a pullback. Next, chart number 21, here's the daily S&P showing you this wave count that I've been showing since the April 7th lows, this nested 1, 2, 1, 2. You can see how you could break it down into multiple smaller degree wave counts. Again, if you don't understand it, don't worry about it. I'm just showing it for those who kind of want to understand. But again, we're now, to me, it looks like that pullback we had in essentially late July was a little micro 4, and we're now in a 5. When this does end, I'm still looking for that deeper wave 4 correction. Could be 5 to 10% perhaps. We get bigger demand zones, supports down here. Then I'd expect a new all-time highs in that wave 5. Okay. So let me draw that out with my drawing tool. Okay. So let's say we pull back. Let's say we eventually top here sometime soon. So some sort of wave 4 pullback, and then you go on to new highs and a wave 5. Again, that shows an idealized zigzag. Wave 4s can be anything. It could be coils. It could be more complex. But right now we're in this 5 of 3 of some sort. That last pullback also in late July, early August, the 60 stochastic bounced right off the 80%. So it's in that momentum condition. Fast stochastics now back overbought. We do have a little RSI divergence now also. Next, chart number 22, here's the half-day chart, just showing the sequence of higher lows, higher lows, higher lows. That's kind of how the KISS systems work too, raising the stops up. But again, we need to break structure. When I mean pull back, break a previous higher low to break market structure, and that hasn't happened. We've just been trending. We do have divergence building, of course. You can see it on the RSI. Next, chart number 23, here's the 2-hour view. Here in this boxed area, this is your next demand zone. So, if we pull back, that's another area to look for support. Now, if we break that, that could be one for the bears short term. Remember, we need to break supplies or demand zones to start looking for some sort of confirmed highs. And chart number 24, here's a 60-minute view. Been showing this channel. We did slightly breach this channel on Friday. Now we'll see what it does come early this week. Okay. And finally, chart number 25, here's a 10-minute view. This shows a possible little, you could have a little 5-wave completion here. It's too early to know. I will say, though, we've been going sideways here for a while. That's why I marked it with a box. So if we were to break this area on Monday, that could definitely cause some more pullback. But we'll see. Like I said, we've created like a little shelf support. We'll see how this looks on Monday. Next, moving on to the NASDAQ, chart number 26, here's the triple Qs. Ended up about 0.5%, but a little doji here. It is getting a little RSI divergence. Again, eventually this is going to need to have some sort of pullback. There's a bigger demand zone down here, and there's now a smaller demand zone right here. Okay, right around that 9-week EMA. Next, chart number 27. Here's the daily chart. Again, just like on the S&P, we made that new high. That new high did set some RSI divergence. Otherwise, again, until we start breaking some of these little supports like the 9 EMA, the 20, you don't want to read too much into it. The trend is still the same. Like I said, no changes. Next, here's the high performance KISS system. This is the daily high performance KISS for triple Qs. And this is still long. So our trailing stops 551.70. System went long there on April 7th. So it's done a damn good job by getting you in just off the lows and keeping you in. Okay. The vertical lines show you the mean reversion trades inside the KISS. So it recently closed out another winner. So it's had 4 winning mean reversion system trades inside the main long. Okay. Now you're wondering, well, how could I have played that if I went long all on April? Again, you don't throw all your money in this, guys. Theoretically, you would have extra cash. You'd have available cash to do these mean reversion type trades. These are something I'll be bringing to the website. But otherwise, they've been doing damn well. I think you guys have seen at least 2 or 3 of these now in real time. I love the combination of trend following and mean reversion. Next, chart number 29. Here's the 4 time frames. Again, similar to the S&P, we've had a pullback. We'll watch these ATRs in a lower time frame, see if they provide some support or not. Next, chart number 30. Here's a 2-hour view of the cash. Little pullback on Friday. Again, there's a demand zone here. We'll see if this can hold or not. Chart 31, here's a 30-minute view. And you can see this demand zone. Again, you can see when you break structure, you break a previous high, then you look for a higher low, break structure, higher low, break structure. Again, we need to basically, like I said, for the market to really start having confirmed tops, you need to start breaking previous demand zones, like your demand zones right here. So you basically in that sequence of higher highs, higher highs. And chart 32, here's small caps, which outperformed last week, up 3.1% on the weekly. Chart 33, here's the daily. Took out that little resistance before pulling back, kind of a little liquidity grab there. Now you got a demand zone right here. So last time it bounced off the demand zone there in late July, early August, and now you got a new demand zone up here to monitor. And chart 34, here's a 30-minute view. Broke out of this little channel we showed last week. We'll see if they can form a higher low or not. All right, guys, that does it. We'll see what happens. Futures are open. Futures are up about 6 points on ES, so up slightly. Oh, and chart 35, here's a 30-minute view of IWM. I thought we were done with the indexes. You can see here, pullback late last week. Got a little coil here forming, perhaps. There's an open gap above. Otherwise, if we move down, this is kind of a thin zone here. You have an area of a little support until you get to that August 11th area around the next demand zone down there. So we'll see which way this puppy goes. All right, moving on, look at a few of these indicators. Chart 36. So chart 36, here's the VIX volatility index. So this, remember, this was trading outside its Bollinger Bands there in late July when that market pulled back for a couple days. But after it pulled back inside the bands, I gave a little market buy signal, and so far that's played out. Now we'll see what it does here. It is kind of there is a little base support down here. Chart 37, here's the 60-minute view of the VIX. Here I noted the open gaps above. The VIX really likes to fill gaps, so if the market wants to start, pulling back, these would be potential magnet areas. Next, chart 38, here's the VVIX VIX ratio. I really like this. This is a great chart for giving you, warnings or for market pullbacks or rallies when it's outside its Bollinger Bands. And this was outside its upper Bollinger Bands in late July, and then we did get that quick market pullback. It got outside of its Bollinger Bands late last week before pulling back. But this is potentially saying that to be at least a little cautious right now. Okay. And here's another one to be cautious. Chart 39 is the S&P to XOP ratio. So XOP is kind of like a defensive sector. But what you got here is the S&P making higher highs, the ratio making a lower high at the moment. Now this can be erased if the ratio goes up, but right now it's given a warning. And you can see the last time we had a divergence was there in February, and then we had a sell-off. I'm not looking for a sell-off like that, guys. All right, but we do have a divergence here, so take note. Next, moving on to bonds, chart 40, here's the 10-year Treasury yield. Up 1% last week. Remember, we're still in this big weekly coil pattern, so move inside the coil. Chart 41, here's the daily. So kind of a fractal. You got a coil inside the bigger weekly coil. We did bounce off the lower coil. We'll see if this reacts to the FOMC minutes this week or not. Next, chart 42, here's TLT 20-year bonds. Again, kind of the opposite of the 10-year, moving down. And chart 43, here's high yield corporate. This tends to be a leading indicator. All right. Now it's still holding up here. Until we see this start to break down, the market's going to be okay, but we'll keep an eye on this. It's still holding these short-term moving averages, still uptrending, no changes there. Moving on to some of the market sectors, chart 44, here's XOK technology. Still holding up here, but it's definitely losing some momentum a bit. Little divergence now forming, so I'd like, if it loses this 20-day moving average, then that will get my attention. You have the 50-day below that. Chart 45, here's XOK on the bigger view. And again, what I'm trying to point out here is you can see how momentum is waning. It kind of had this V move up and it's starting to taper off. So, and you have a divergence building. Eventually, this is going to need to be worked off, guys, with some sort of pullback. It's not just going to keep going, right? So, next, Charter 46, here's XOC, communications sector. This contains a lot of the FANG big tech stocks, and it broke out recently, not surprised. So, that's still very strong. Charter 47, here's semiconductors, little pullback late last week. Still holding these moving averages. We do have some divergence, but no changes. Otherwise, no breaks of structure yet. Charter 48, transports. They were weak, but so far they've had simply a three-wave ABC pullback. They've recovered the 50-day moving average and the 200-day. Now here's a couple sectors that look vulnerable to me. Financials kind of have a little head and shoulder look to it. Now again, this would be negated on a move to new highs, but you can kind of see a little vulnerability here if it were to weaken more. Charter 50, here's the banks. You can see the same thing here. Keep an eye on that this week. Next, Charter 51, home builders. They've rallied pretty strongly, especially with those, with the market thinking the Fed may have 3 rate cuts this year, but we'll see what this continues to do. Next, Charter 52, biotech has been strong lately. Remember, this tends to move with the Russell. And Charter 53, here's healthcare. This is rallied off this double bottom. Remember, I just showed UnitedHealth. That's a big component of that. And Charter 54, XLE Energy, still kind of hanging around this kind of little small channel, still holding support for now. A couple stocks I was showing, Oxy, Warren Buffett's oil stock, still it's in a nice coil here, so we'll see which way this puppy breaks. Charter 56, here's the weekly view of coil of Oxy. It did hold that demand zone earlier in the year, but you got a coil right now. And Charter 57, Devon, another energy play, also in a coil. Charter 58, here's XOP, which I showed in the S&P XOP ratio. Kind of has a flag look to it here, so we'll keep an eye on this defensive sector. All right, moving on to commodities. Charter 59, DBC, the index for the week up down 0.3%. Remember, it's been in this channel for 2+ years now. One day it'll break eventually. Charter 60, here's the daily. Bullish view would have this as a big ABC correction. Notice we're right around the 200-day moving average. We'll see if it finds support there or not. Charter 61, here's crude oil. So far, big ABC pullback off those highs. There's a big demand zone down into here. Charter 62, natural gas, UNG. Natural gas came all the way to this big shelf support from November. So logical bounce off here for now. One hell of a correction from the March highs, basically playing out the seasonality. Natural gas tends to be weak during the summer months, warmer months, and that's what it's done. But could have been a lower risk entry down into here finally. And here's the weekly view of natural gas index. Notice it bounced off the 61.8 fib here. That's always an important area to watch. Next, Charter 64, copper. Remember, got absolutely pummeled with that tariff stuff. Little weak bounce here so far, which we expected, but man, the chart needs help. Next, Charter 65, DBA, agriculture. Nice rally last week, got 3.25%. That's a big move for this slow mover. This would be the bullish view, ABC. By the way, back in 2024, I pointed out the cup and handle, which obviously played out well. But so far to the cup and handle, every pullback has been ABC, new highs, ABC. Now we'll see if this makes to a new high again or not. In Charter 66, here's the daily view. Again, it basically lost the 200-day moving average, regained it. Nice pop there on Friday. Good volume. Next, looking at some of these other match macro plays. Charter 67, Remax. Remember, I gave this as a long back in June out of this weekly support zone. You had that double MACD divergence. Everything was set up there. It's got a nice move, and it rallied again last week up another 6.4%. So congrats, guys. Those of you who might have bought this back in June and you're still long, maybe it's now going to tag this next demand zone. Charter 68, here's the daily view. So, bounced off the 20-day that last time. I thought it might make a lower high, but instead it made a new high. Man, super strong. Jabber 69, Platinum. Now, Platinum had a hell of a move out of that coil, as you know. Was super bullish on this in April, March, etc. It's had the initial pullback. What I'm looking for now, it's bouncing off this 9-week EMA, some sort of lower high, come down again. That would be your ideal ABC. Then you buy the hell out of it again. You know, we would basically work off this wide moving average ribbon. Okay. But again, I like it long term, guys. Next, Jabber 70, Bitcoin. Bitcoin did indeed hold that support and that pullback into July. Pulling back, still has a little higher low here. Jabber 71, Ethereum. Broke out of this cup and handle, as you know. Little pullback last week, bouncing here a little bit. Jabber 72, here's Ethereum on the weekly. Remember, this is part of Matt's macro. We have this big multi-4-year coil pattern. Notice it basically tagged the 2021 highs where it pulled back from, logically. And Jabber 73, here's the other weekly view, broke this coil. One thing we possibly could see, not saying it'll happen, if we get a pullback, ideally, if you retest that trend line there, that would be your logical buy area. Next, Jabber 74, US dollar, down 0.3% for the week. Remember, a month ago plus, it bounced off the demand zone, but still struggling here. Jabber 75, here's the monthly view. Again, over a month ago, it bounced off this uptrend line, you know, going back decade plus. Still holding it for now, but it's kind of weak. And here's the daily chart. Again, now I want to see if it can form yet another higher lower here or not. So far, it's only had a 3-wave bounce up. And Jabber 77, here's the wave count structure. So we had that 5-wave completion there in July. But right now, so far, we only have 3 waves up. That's either a bearish ABC or, you know, the bullish view would be a nested 1, 2, 1, 2, and we're going to form another higher low. But it really needs to form that higher low if it's going to do so. And moving on to precious metals, Jabber 78, here's gold, down 1.9% for the week. Again, it's still in this big weekly coil pattern, you can see. Hell of a move, though, off that base. Remember, part of Matt's macro way back in early 2024. Jabber 79, here's gold on the daily. You can see this coil. Just textbook coil. Again, this is either going to break down. If it does, I view this as a wave C. I would love to test the 200-day moving average. Hasn't been there for a while, or it could break up. Jabber 80, here's another daily chart of gold. Same thing. Again, the only bullish view would be the stocks are outperforming here. You can see on the GDX-GLD ratio. But I'm going to comment on that more below later. Next, Jabber 81, here's silver. Still hanging in here. So far, we got a little higher low. Still above the 50-day moving average. And looking at the mining stocks, Jabber 82, GDX, up 0.4% for the week. This has had one hell of a rally out of that coil pattern from early 2024. And Jabber 83, here's the daily view. Remember, we broke out of this little channel recently. We're now consolidating. We could be flagging here, perhaps. That said, I don't see this running away, and here's why. So Jabber 84, here's the BPGDM. This is the bullish percent gold miners index. It measures how many are on point figure buy signals. So I haven't shown this for a while, but it is now at 100%, guys. It doesn't mean price can't go higher, and maybe it will, but it's at 100%, all right? The ideal time when you buy your swings are when this is down here, like, you know, in May, it pulled down to the 50% range. In January, it was down here in the upper 30% range. Last year, in 2024, in the early part of the year, it was down here in the low teens. That's where your big swings are, guys. Not when it's at 100%. That is a warning. And Jabber 85, here's the Rinko version. Nice clean view. Again, it's at 100%. It is in the overbought territory, all right? Your big swing trades come down in here. We're very far away from that. Anyway, guys, that'll do it. Again, hopefully y'all have had a nice weekend. As far as YouTube, please subscribe, like, make a comment. That helps out the channel. And as far as Matt's macro, you know, I added UNH to the high performance KISS. It's a good reason why you might want to consider subscribing. All right, Enjoy the rest of your evening. We'll see what happens this week. Take care.